I'm Eddie Cannell.
And I'm Tom Cannell.
Welcome, everyone. This is the Mortgage Brothers podcast show. And what we're going to be doing today is going through the real estate agent kind of checklist, going step by step, what you need to know about leading your borrowers through a reverse mortgage.
Yeah, reverse mortgage for purchase. So reverse mortgages can be intimidating just on any refi side. But today we're going to be talking about how they can be used to purchase. And like most things in life, once you get over the initial and the questions, you'll see it's really not as complicated as you think. So here we go.
Okay. So what are the steps of a reverse mortgage home purchase? Now, we would just break it down like this. There's the counseling, the sales contract, the application, there's disclosures. This is an FHA loan, so there's a case assignment, which is normal in every FHA loan.
It usually happens in the background, by the way.
Right, and then the appraisal ordering. Okay, so let's start with step one. So step one, first, I would say you want to call if you have any questions at all, any kind of high-level questions, just call us. Call your loan officer. Let's talk about what your customer, you're going to be people that you know. I mean, that are maybe potentially good candidates for the reverse mortgage. Someone who's over 62 years of age. They want to stay in their home. They want to kind of age in place there. They have a lot of equity. The home's appropriate, meaning it's easy to maintain from them. It's not a two-story home with lots of maintenance. I mean, it's just like the perfect home for your client to. Well, let's just say, I'm describing that reverse mortgage on a kind of a refi.
Yeah,
but it's basically finding that
it feels the exact same way on the purchase. We can also summarize it this way: reverse for purchases are basically if you have a big down payment, but you don't want to have any mortgage for the rest of your life. You just sold a home. You have some home proceeds. You want to put a big down payment. That big down payment's all you need to potentially have no payments for the rest of your home living years.
That's right. So call us. We'll go through the details and kind of get an idea of if it's a good fit for your borrower.
Yeah. All right, what's step two?
Okay, once a borrower has decided to pursue a reverse mortgage, the first thing that you need to do at that point is get HUD counseling.
Why is counseling so important?
Yeah, so the FHA, the Federal Housing Association, they don't want us just coercing or kind of selling the reverse mortgage on your client. They want to make sure that the borrower.
It's a consumer protection, really.
Yeah.
Now, how useful is it? It is definitely useful, but like most things, that come down through regulation, there are some, things that are not very efficient. But the point of this counseling is to help educate borrowers so that they know exactly what they're getting into. And once that counseling is completed and that box is checked, then we're able to really kind of move forward.
Yeah. So the buyer will be making an appointment. There's a fee to do that. It's $125. There is some scholarships available depending on the circumstances. But basically, they schedule an appointment to talk to a counselor. It's a one-on-one counseling. It'd be done over the phone or over the phone is really the easiest way. There used to be physical locations they could go to, but they can go over the phone. It's going to be easiest that way. And the point is, you're going to be going through that, and they're going to give you a certificate when you're complete.
Right, and it's important to know, again, the loan officer, which is, Ed Cannell and Tom Cannell, whoever loan officer that you work with here within our organization, is not selling anything. We're here helping to walk through the process, and that's what the HUD counseling really is that they're helping explain. They're not people just trying to sell the reverse mortgage. They don't make any money on doing the reverse mortgage. Their job is to simply make sure the consumer is educated.
Yeah. Step three is we take the borrower's official application. So basically, we can't take an application from the buyer until we get that certificate from HUD. Then we can take the official application, generate a prequalification form on the Arizona prequalification form right here, just like normal.
Yeah, it looks just like a normal forward purchase.
Yeah, and we're just going to select the type of loan will be reverse mortgage. There won't be any payments because this is a reverse mortgage. We'll tell you what they qualify up to on the loan amount. Again, there's no pay stubs, W-2s, or any kind of income. There will be assets, we'll need to identify. So the pre-qualification form will be completed, and you'll be given that.
Yeah, and it's basically assets and credit.
That's right. Okay. You're going to write the contract like any other regular financing. Page 1, this is an example. And of course, consult your broker.
And the one thing I noticed here is up on our example, under the buyer's name, probably we meant to say buyer name.
Yes.
And under seller, seller name. But
Good
again,
point.
we're doing that just to make sure you guys are paying attention.
Yes. Okay. So the buyer and seller go into the appropriate fields there. When you put the loan amount in here, that's going to be the loan amount. So the borrower is going to be approved on a reverse mortgage up to a certain loan amount. We're going to let you know what that is. You're going to put that loan amount in here, and then you're just going to, there'll be earnest money like normal. But you'll be secured by a reverse mortgage.
Right. Now, the one piece not put in here is going to be the down payment. So basically, it's going to be the purchase price minus your earnest money minus your down payment will leave you with a net, loan via a reverse mortgage of X.
All right. So this is page 3. There's a reverse mortgage for type of financing. You just put your reverse mortgage in there. And this is very important. On a reverse mortgage, there's no seller concessions allowed. So on an FHA home purchase, like normal forward mortgage, you can go up to 6% seller concessions. There's no concessions allowed on reverse mortgage. So that will be, you want to make sure that's blank.
Holy cow, that long list
So
here.
this is a typical list of buyer and sellers fees. What fees can the seller pay? What fees can the buyer pay? This goes through that list. It's actually the same list that would be normal on an FHA. So don't get too overwhelmed with it. It's just standard fees that a buyer and seller would pay for.
Mm-hmm.
All right. Step 4, we submit. So you give us the contract. The buyer and seller are on their way. We'll tell you how much time we need to close. And I think, it's just, you're going to want to consult with that when you're writing that offer. But we submit the loan to underwriting. We order the FHA case number in the background. This all happens in the background. And then we order the appraisal. Step 5, the loan is approved. There might be some conditions with the approval that we gather. But again, there's no income and assets with the reverse mortgage. So
we have some assets that we're working with, but just not the income.
Yeah, that's right. So the loan is then cleared to close. Get final approval with clear to close. The loan documents go to the title, and this is all just like a regular forward mortgage. The loan is then funded, and after the docs are signed, and then the escrow is closed. That buyer owns the home. They have the title to it. They have all the protections. Reverse mortgage, it comes with reverse mortgage.
Yeah, ownership. This is one of the biggest misnomers, that they think that they own it differently. No.
Yeah.
You either own a property or you don't. When you buy with a reverse mortgage, you own just like you did if you paid cash, or just like if you had a forward mortgage. There's just a lender. Instead of the loan balance going down, the loan balance is actually going up.
Yeah. So let's just quickly go through the four big myths real quick. This is what buyers, these are the myths that buyers have. I heard the bank can take my home away from me. That's not true, right? Bank can't take your home. Just like as Tom was saying, you and your family estate will hold title. The bank is simply putting a lien on your property just like a normal mortgage.
And actually, the banks don't want your property. Some people are like, oh, that's just a way for them to take our property. Actually, no, that's like double not true, because banks are not set up to own properties.
Okay, the second myth we hear a lot is, my heirs will be responsible for repaying my loan. It's not true. If you die, your heirs will have 12 months to sell your home, or the home of the buyer.
Yeah, and the 12 months too, that will be a little bit specific to any lender that we go to. There are periods there, but the bottom line is that they are going to be reasonable. They do not want your home, but they do want that loan paid off.
Right. And imagine that we have a situation where the property declines in value. The property cannot be sold for more than the mortgage is worth. The value of the payoff of the loan. The heirs are not going to have any kind of penalty. They're not going to have to pay that back. It's a non-recourse loan.
Yeah, and if anything, they do have the ability to buy that. Yeah, and they can actually buy it at a slight discount, which to me still kind of boggles my mind.
Right.
So
your heirs can buy it. The heirs can buy the home back at 95% of the value.
at 95% of the value.
Okay, myth number 3: the bank will kick out my spouse if I pass away. And this was a real fear. Old reverse mortgages, it was common that they've been revised. Reverse mortgages have gone through a revision years ago. But if you have a surviving spouse, they're not going to be kicked out.
Right.
They can live in that home if they're much younger. And they live much longer. And
usually, what happens is it would be a spouse that is not on the loan. So on most reverse mortgages, that spouse would be on the loan. And in that case, they're on the loan, they're alive, there's no issues. This really pertains to a spouse who's not on the loan. And even though they're not on the loan, they will be on title. And as long as they're considered an eligible non-borrowing spouse, then they have the ability to stay in the home. That is a total difference than what it used to be. So a huge myth. That's probably one of the most important to make sure we get right.
And lastly, number 4, someone told me that I cannot sell my house. It's not true. So let's say you buy a home, use a reverse mortgage, and then 5 years later you decide, I really don't want to be in this house anymore. I want to sell it.
Yeah, I want to sell and go move to, where would you move? Move to the beach.
Yeah.
You can sell. That is no problem. You simply call up the bank, or you find out what your statement is, and you simply look to see what your loan payoff is. It's that simple.
That's right. You make the decisions. You're 100% owner. Bank can't tell you when to sell, and it's just that simple.
Yeah. Also, too, some people come into an inheritance. It's rare, but they come into a big inheritance, or they were to have a big winning. They can simply pay the reverse mortgage off, any type of remaining balance, and put it into a free and clear state again.
All right, so I hope that helps kind of give you ideas of the steps to help your buyers get a reverse mortgage, go through that purchase contract. If you have any questions, if you have clients that have any questions, be sure to reach out to the Mortgage Brothers team. Be sure to call and email us anytime.
Yeah, we're here to help. Thank you, folks.
Thank you, everyone.
Thank you for watching the Mortgage Brothers podcast. If you have any questions, email us at team@azmortgagebrothers.com. And if you like this content, be sure to like, comment, and subscribe to the Mortgage Brothers team.